Okay, so let's get started. Today we're going to go over short selling. This has been something that I've had a lot of requests on, among others as well, that we will get covered in the future. But a lot of folks wanted to have a session on short selling, so here we are. So basically, let's go over real quick what short selling is. So it's basically just borrowing shares from your broker, right? You don't own those shares, let's say, and so that you can sell those shares on the open market and then hopefully buy the shares back at a lower price, which automatically returns those shares to your broker. And you basically keep the difference. You can't sell something you don't own. So in order to sell something that you don't own, you have to borrow those shares from your broker to sell them. And then you buy them back whenever you hit your profit target, of course. So how do you execute a short sell? Well, it's exactly the opposite of executing a purchase. Instead of buying shares and then selling them at your profit target, you sell shares and then buy them back at your profit target. So instead of hitting the buy button first and the sell button when you're ready to hop out, you hit the sell button first and then the buy button when you're ready to hop out. It works exactly the same, just mirror opposite, right? And the money factor is also the same. So, if you buy, let's say 1,000 shares of a stock and it goes up $1, well, you made $1,000, right? If you short sell 1,000 shares of a stock and it goes down $1, you make the same profit. You make $1,000. So it works pretty much the same. With different brokers, there can be some fees in there. I know with a TD Ameritrade, if you don't hold it overnight, there's no fees. So you want to pay attention to whatever broker you're using, of course, to identify whatever kind of fees that you might see. And we're going to get into some short examples on Saba here shortly. I'll show you guys. We'll do it on the on-demand deal, and I'll show you what we're looking for on that short setup as well. Okay, so you execute it by just the opposite. You sell first, and then you buy when you're ready to close your position. So what's the big fear of short selling? Why are so many traders afraid to short sell? Or to go short. There's a lot of people that say, man, I would never do that. It's too scary, Well, it's not really. So, and I can show you or tell you why it's not so scary. Why are people scared to do it? Well, most of the time people are scared to do it because you can lose more than 100% of your investment, potentially, right? So if you buy a stock, just normally go long on a stock, the most you can lose is 100% of your investment if it went all the way back down to zero, right? If you held it that long. Number one, why would you hold it that long? And watch it just go all the way back down to zero? Well, of course you wouldn't do that. So with short selling, the same thing. So yeah, you don't have, you have the potential of an infinite loss, but that's only if you continue to hold it. And we don't do that, right? We have a risk management plan that says, hey, we're only allowed to lose 1% or 2% on a particular trade. So we're not just going to, it's going to go up and hit our stop loss, whether it's actual stop loss or a mental stop loss because we're in pre-market or after hours. So we're not going to just watch it go up and up and up and up and up while we're losing money. We're going to basically cut our losses early. So, in my opinion, short selling is no more risky than going long. But you have to know what you're doing. You have to know what you're doing when you're going long as well, right? So, this is why people are scared of it because you can lose instead of 100% of your position, you could lose 200%, 500%, 1,000%. But it would be silly to ride it up that long to where you're losing that much money. So just like when we go long, you want to make sure that your risk management is in place when you go short. So if you're willing to lose 1% of your account size on each particular trade, or 2%, which is kind of the average, then that's where you set your stop loss. And if unless there is a key area there, if you're shorting a key resistance area, that you're wanting to look for, and we'll go over that. So, just like what I said, just as you were going long, when you go short, just cut your losses quickly. Once again, I've said this many times, and even back in our risk management session that we had, small losses are okay. They're gonna happen, right? There's no way around it. There's no trader on this planet that makes a 100% green trades. They just don't exist. So what we want are small gains, mid-sized gains and big gains and small losses, right? We want to have our losses small. Like I said, they're gonna happen. Just keep them small. What we want to avoid are big losses, bags basically. So cut those losses as quickly as possible so that they don't become big losses, whether it be going long or short, doesn't matter. So what do you need to short a stock? Well, you need to have a margin account. Okay, it's with all brokers, because it's a FINRA rule. And if you want to focus primarily on shorting, then you're likely going to need several different brokers, because each broker is going to be different on the shares that they have available to borrow, right? Like on Saba here, I'll give you an example. On Thinkorswim, you may not have this on your Thinkorswim, but you can get it by upgrading your account. So let me make sure that, yeah. So right here where it says, see this where it says HTB? So right in between those two other ones, the bid and the ask and the position, you see HTB. That stands for hard to borrow. You can have three different ones. You're going to have an ETB, which is easy to borrow, an HTB, hard to borrow, and an NTB, which is none to borrow. So easy to borrow is obviously easy to borrow, and every single time you try to short that stock, you're going to be able to get shares to short. When it's hard to borrow, it's hit and miss. Well, I'm talking Thinkorswim. Hard to borrow is hit and miss. NTB, there's no shares to borrow, and basically when you try and put in a short order, you'll just get a rejection. It'll just, say that there are no shares to borrow. So if you don't have this on your Thinkorswim, maybe after the session, I can show you a little trick how to get it on your watch list, because you do have to have a special account. I don't remember which one it is. It's some kind of options upgrade, I think. So you may or may not have that on your Thinkorswim. But anyway, that's what those mean. So the reason you would need likely several brokers is that, so if you are looking at a short setup, you don't want to spend a few hours looking at a short setup and you find a great setup that you think is really going to be profitable on the short side, and then you have one broker and you go to, it's time to enter that short, and you go to try to enter it and you get rejected because there are no shares to borrow, and you just wasted all that time. Whereas if you had several brokers, then you can likely find a broker that you have that does have some shares to borrow, which will obviously enable you to take that short trade. So keep that in mind. There are some that are a lot of people use, heavy short sellers. There's I'm just going off the top of my head here. There's Cobra is very popular, Trade Zero, Interactive Brokers, and that's more for international traders. E-Trade's not bad for shorting either. TD Ameritrade is not too bad either, but sometimes they can be a little bit hit and miss. But that's all that I use is TD Ameritrade, and if it's available to short, great. If it's not, then I'll just miss out on that one. But I always look and see right here what it says, so I'm prepared. If it says HTB, I'm prepared to possibly get a rejection of not having any shares. So okay, so those are the things that you need to actually short. So what are we looking for to enter a short position, right? So a lot of people are saying, well, hey, I know what to look for when I'm entering long, but I have no idea what to look for when I'm entering short. Well, it's pretty much just the opposite of what you're looking for when you're going long, right? And I'm not going to go over them today because it would take too long to go over all of the different bearish patterns, but you guys probably know those anyway, and if you don't, you can study them. And if you don't know where to find those bearish patterns, just send me a private message and I'll be happy to share with you where you can find those. So you're basically looking for opposite things of what you're looking for, when you're going long. I'll give you one example. Instead of looking for a double bottom going long, you're looking for a double top going short. Just basically the opposite. Okay. You're also looking for resistance levels. Where you're looking for multiple fails of those resistance levels, okay? And I'm going to give you one of the examples that I have here today on Sava is a multiple resistance level fail for a short opportunity. That's one that we're going to go over. So I have an example of that. People also look for stocks that have run 50% or more, and so they're watching for that when it's going to come back down. And it certainly depends on why it's running, right? If it's running on nothing, if it's just being pumped on Twitter or being pumped by, whoever, then, you might look at that one a little harder than you would one that had really good news, whether it be good earnings or good data, because those may hold some of those higher prices. People also look for, those 50% runners. Let's say they have their PM high. They ran during pre-market. Some news came out in pre-market and they were up big in pre-market. 60, 70%, whatever. And then they're looking for that particular stock to fail once the bell rings, to fail that pre-market high, to hit that resistance of pre-market and fail that. And you have to be careful. Just like when we're going long, you want to have confirmation that it is failing and that it will fail that pre-market high. You don't want to just throw an order up there at the pre-market high, because if it breaks that pre-market high and breaks and holds that and then gets some volume, then obviously you're going to be in a bit of a trouble. So another short selling strategy that is very popular is shorting the first 5-minute candle low after the bell. So let me give you an example of that right here on Sava. Turn my handy dandy drawing tool on here. So let's go to the 5-minute chart here, and I'll give you an example of what I'm talking about. So right here, so this is the 5-minute chart, and here's your first 5-minute candle right here, right? So a lot of short sellers, once this opens up, now obviously you have to have been knowing what's going on with this stock. You're not just picking a stock out of the blue and shorting once it breaks below the 5-minute low of the open, right? You already have in your mind that, hey, this stock is going to go down for whatever reason. So you're looking to short that low, right? So in this case, it would be right in this area. And that short would have worked out for you, not for a lot of profit, but it would have worked out a little bit there for you. So that's another popular strategy. When you're using that strategy, you obviously want to know your pre-market high, your pre-market low, previous day close, those levels. Have those levels on your chart, so those are other areas that you can key in on as well. Okay, another popular strategy is first red day. So what does that mean? So basically, first red day strategy on a short means that you have a stock that's been up for numerous days in a row for whatever reason. Okay, maybe it had news, maybe it's been pumped, whatever reason it is, it's up 3 days, 5 days, 9 days, fill in the blank. It's just been going crazy up, right? And you're looking for that first red day. Okay, that first red day, you're looking for it also to be trading below the previous day's close. Okay, so at that point, these are big runners. They're up huge. More than 50% is what I like to look for. And you especially key in on those if they don't have a catalyst. It's being pumped, right? And we're looking for these on that first red day because most traders are not looking at that point to hop in on that stock. Maybe they've been trading it those previous days when it was running well, right? They're not looking to hop in on a stock that's already up so much percentage and it's really extended, right? And the first red day is basically confirmation that that's what's going on. And with the price being up, you'll also have selling pressure from those longs taking profit, right? They're selling. So you're going to have selling pressure from longs taking profit. They're starting to realize, okay, this trend now is looking like it might be over, right? So you have profit taking. And you also have those same longs may even reverse their position, and once they take profit on their long position, now they may even enter a new short position. So you have that coupled with short sellers coming in on that first red day. So that's another very popular strategy. Obviously, any strategy that you want to look at for short selling, you certainly want to back test it before you start using real money, and make sure that that strategy works for you. Because like I've said in the past, just because strategy A works for trader A doesn't mean that it's going to work for you or anybody else. So make sure and keep that in mind. Okay, and then also obviously shorting bad news, right? We see all the time, we get a bad ER, or we get bad data, or we have a nasty gram, which is like a short seller report, like we saw. I think it was ALLO or I don't remember, one of the last week. There was a couple of them that got. I know Sava got a couple nasty ones. So FDA, CRL. Any really bad news, you can short those. A good example of that, and a recent example that ran well on, I think last week, was CCXI when it got the FDA approval. Well, if you look back in May, I think it was, the advisory committee had a split decision on efficacy, right, for their drug, the same drug that just got approved last week. And so basically they pushed that date out to July the 7th. And on that day, it tanked hard. I think right at 80%. I mean, it went down huge from $40-something to like, I don't remember what it went down to, but it tanked really hard. So, shorting bad news, right? But just like we don't know where the top is when we have good news, it's difficult to know where the bottom is when you have bad news, because you can have trader overreaction. The only thing we have to look at is, previous support areas. But in CCXI's case, it actually broke big time below the 52-week low. So you're kind of in no man's land at that point. So make sure that you are taking profits, you're scaling out on the way down at those key areas, right? Okay, so that's a really good example of shorting bad news. CCXI, I think pretty sure it happened in May. So just take a look at the chart back in May, and I already told you what the news was, and you guys can check that out. So when do we want to take profits when we are shorting, right? So it's very situational, just like it is when you're going long. So it's going to depend on the reason that it's up. Is it up on news? Is it up because it's being pumped? How good was the news? Is it a low float? And that's why it's up even more. You have to figure out what the likelihood of it holding those gains are, right? So it's very situational when we're taking profits, but we can always scale out as it's going down, just like we do scaling out as it's going up. It's never, in my opinion, never a good idea to just hold your entire position trying to find the top and then selling all at once. More times than not, you're going to give up some profits that way. So I always recommend scaling out, whether you're going long or short. That way you can lock in some of those profits, right? Okay. So, we talked about, where we're taking profits. You definitely want to key in on those key support areas when you're shorting, right? Even daily moving averages, right? You just want to key in on any possible support area, or accumulation area where you could see a bounce back up, okay? All right, so let's get into some examples. Let's take this Sava as an example. So let's say that we're watching Sava and we're bearish on it. We don't think it's going to continue up. We think it's going to go down. And so let's take a look at the high. I think this was, let me get off of this 5-minute chart and back on the 1 minute here for a moment. So let's take a look at what the high was the day before. Okay, this was trading Friday here. Let's look at Thursday's high. All right, so Thursday's high right here, 54.56 was Thursday's high. So what we want to do is we want to mark that high, 54.56. Can I get there? There we go. Okay, and what we might even do as well is you might even go in here and edit this, and let's call it prior day high, and we're going to show the name so we know what it is on the right. Let's change the color because right now we don't know if it's a true resistance level, if it's a solid resistance level or not. So we're going to color it now so that we know that it's at this point it's questionable, right? So let's say we were watching this stock and we saw, after close on Thursday, we saw that it made a high on Thursday of 54.56. So what do we want to look for the following day? Well, we want to look for on the following day, maybe if it gets back up to that 54.56 area, it could possibly see resistance there again, right? So let's take a look at some other charts to just confirm that. Let's take a look at let's go on this other one here. Let's go here. And is this 5 minute? 5 minute. Let's take a look at this 5-minute chart real quick. Okay, so right here is our level. That's where the high was here. Right there, right? 54.56. Let's scroll back a little bit here. All right, we'll just take a look at this here. Okay, so same thing right here. So this thing all day, once it broke below that 54.56 area, it came up here and tried to break several times here, right? Couldn't do it. So this is starting to look like it might be a key resistance level, right? So let's take a look at another chart. See if we can determine that that's in fact a key area. Okay, so let's look at the daily chart here on Sava. Okay, so here's our line, 54.56. So let's look back in time here. Let's look left, right? So again, we see it right here. Meeting resistance right there again, all in that area. Right here again, all in that area, right? Look, resistance here again in that 54.56, right? Resistance here again. So I would say, and it held support here. Held some support there. Right? So I would say that 54.56 area, if you guys would agree with me, looks to me like it's a key support resistance area. Resistance when it's trading below, support when it's trading above, right? So I would say that that's a key area to look at. So with that said, let's go back and see how this plays out. Go back to our 1-minute chart here. And what I did is I stopped at when it's coming up to that high on Friday. So here was the high on Thursday. On Friday, let's say that on Thursday we looked at all of that. We saw that it was a key area. And now we're looking to see if it's going to go back up. Maybe it didn't though. Maybe it just continued on down on Friday and it never went back up to that level. But that's how it goes. Sometimes you can be looking for a setup and it just never plays out, right? But as I always say, wait for your pitch. Wait for that setup to happen. Don't just, grab it just because you think it's going to go down. Make sure that you have a plan and you have a reason of why you think that it could hit its head up there and come back down. So as we're looking at this, we have two options, right? So we could take an aggressive trade. We could go ahead and go over here on our ladder and we could put in a sell order, right, of 54.56, right? So we could come up here and 54.56, and we could go right there and slap in a sell order, right? And so once it goes up to that, well, I guess I did it at 54.55. Once it goes up to 54.56, it'll automatically fill your short position for, in this case, 500 shares, and you're now in your short position. But that is an aggressive trade. And why? Why is it an aggressive trade? Because we don't have yet confirmation that it's not going to break that 54.56 level. Because as we've seen, this is a key area. So if it does break that level and holds, then it's not going to be a very good short trade, most likely, right? So let's just say, for ease of purposes, that we are going to take an aggressive trade on this. You feel very strongly that it is not going to break and hold that 54.56 level. It's going to come crashing back down. So we're going to take a trade here. I'm going to go ahead and start playing this. Obviously, I know what happens, so this is obviously going to be a very easy positive trade because we know the future. But just showing you how it would play out. Let me see about fast forwarding this a little bit. I don't know how long it's going to take, but we'll see. So you guys saw what I did. I just entered an order, a sell order, right? Not a buy order. Entered a sell order up here at this 54.56 level. Sorry guys, this might be boring here for a minute. I don't know how long this is going to take. I didn't watch it that closely. Now, just to let you know, this is not, I wouldn't take this aggressive trade. I'm just doing it so that it kind of goes faster. I would wait for confirmation because, like I said, if this thing breaks above that level and you're in a short position, could cause some problems. So I always like to wait for confirmation whether I'm going short or long, right? This thing's taking a little bit longer than I thought it would. And I can't really fast forward it anymore, so we're going to have to just watch it play out. But anyway, this also gives you, what would be a real-time example of, how to place that order. Of course, you could have just hit the sell market button if you wanted to. You could have hit the sell the bid button. You could hit join the ask button. You basically just want to enter with a sell versus a buy, right? Obviously, a sell market would have gotten you in immediately, and a sell the bid would have gotten you in immediately as well. Join the ask would have, you have to get in line. So maybe we'll get filled up here. And I don't know why I didn't get, oh, there we go. Okay, so now as you can see, when you enter a short position, it's going to say negative 500, right? Instead of a positive 500. So if you took this aggressive trade, I would suggest, if you take an aggressive trade, that you enter with a partial position. So let's say that we were willing to risk 2,000 shares on this particular trade. So if you took an aggressive trade, you enter with, what I enter with is 25% of what I'm willing to risk. So I enter with 500 shares. And then what I'm looking to do is as we're going down, maybe there's another support level there. If we break through that next support level with confirmation, I'll add to my position, right? So let's just say hypothetically that there's another support level here, and we just broke through it. So I'll go back up here and I'll hit another sell, 500 shares, and now I'm in for 1,000 shares, right? We'll keep watching it for a few minutes here, just so that we can give you guys an idea of a full short trade. I promise you this trade will be green because I know the future. So let's say that next time, let's say that this right there, that yellow line is my 20 EMA. So let's say that that was another key support area there. So we'll wait for it to break through that next key support area, looking to add to our position again, because remember, we're only 50% into our short position at this point, right? So once we break that, that level, let's add another 500 shares. So now we're 75% into our position. And now let's say next time maybe we want to, let's say there was a key. I'm doing this all quickly, and I wouldn't normally be doing it at necessarily these levels because it's pretty quick, right? I would want to have a little bit more room, but I don't want to sit here and just waste a bunch of time, you guys watching what's going on here, because it doesn't really make that big of a difference for our session. I'm just using this as an example. So once we have confirmation break of the 50, which we actually just breaking now below VWAP. The dotted purple line, by the way, is VWAP. The green is the 100 EMA, and the orange is the 200 EMA. Of course, we're looking at a 1-minute chart. So we don't have confirmation yet. Now keep in mind, if you wanted to, we're looking at $500 already. You could have already exited your position if you were worried about that VWAP bounce. We saw right here that VWAP, it bounced, had a pretty nice bounce on VWAP. That might have scared some folks. And if when you saw it bouncing off of VWAP, that's certainly an area to focus in on, right? Maybe you wanted to exit your position there. Maybe you wanted to scale out a little bit, because keep in mind, you can always scale back in. You can, there's many times when I'm in a trade that I'm adding and taking profit constantly, depending on what's going on with the chart. You don't have to just buy all of your shares at one time and sell them all at one time. You can scale in and scale out. Back in with some, back out with some, depending on what the chart is doing. Is it holding a level? Do you need to scale out there? Is it breaking down below the next support level? Do you need to add there, right? So we're looking at some pretty good confirmation here that we're continuing to break down. So let's say that this 200 EMA was another key resistance level down here. So, and it's having trouble breaking through that, right? So let's add the rest of our position here, which for some reason it's not letting me do that. Sometimes when you're messing with this on-demand deal with Thinkorswim, it gets a little bit quirky. Anyway, you guys get the idea. So let's go ahead and buy back our shares. And of course, there we go. Let's see if it'll let us do that. It did. Okay. So now we bought back all of our shares. Let's say that, it was bouncing off the support level here and it was going back up, so you didn't feel comfortable, so you wanted to just hop out of the trade. So anyway, good example there of how to actually execute the short sale. Like I said, you just sell first instead of buying first. Very, very simple. All right. So really, let's see. I think I showed you guys the example of the 5-minute. I did. And I showed you guys the example of CCXI. Let's pop over and look at CCXI real quick. Let's take a look at the daily on CCXI right here, just so I can give you guys a visual of what I was talking about when it got that bad news from the FDA that day. So right here, it's in this area. Let me open this up, maximize it here. So right here is where it got that bad news. Right on this day. That was May the, let's see what day that was. May the 4th. So May the 4th, that nasty news came in. I actually did short this. This was easy to borrow at the time, and I did short it. I don't remember where I entered and where I exited. I didn't wait until I didn't make it all the way down here, and it even went down further several days, a couple of days after, and hit a new 52-week low down here, 953. It was continuing to make new 52-week lows on the way down, but this is when that nasty news came on the same exact drug that just got approved last week. They ended up entering, if you look at the news, they entered on June, I think it was June the 7th or July the 7th. Let me look here real quick. July the 7th. So basically when it got that bad news, they pushed their PDUFA date out to July the 7th. On July the 6th, they entered they basically made an amendment to their NDA, their new drug application, which in turn pushed the PDUFA out to October the 7th. And when they did that, this is just some things to take a look at when you are looking at these for upcoming catalysts, okay? So we can see how bad it went down. It was trading in the upper 40s when it got that news that day. Came all the way back down to $17 or so. Ended up closing at 26 bucks, somewhere around there. So what happened here on June the 6th, let's find that. On June the 6th, July the 6th. So July the 6th is when they actually entered the amendment. And see what it did here. After that amendment came in and they pushed the PDUFA back out from July the 7th to October the 7th, look what happened. So they entered it right around here. Look what happened when they entered that. So what does that tell you? Well, that tells you that now traders are having, now that they made an amendment based on what the FDA was looking for, right, that traders got a little bit more confidence back in that drug again, okay? So when that happened, we saw this spike back up. It popped pretty good over a few days from 13 bucks back up to, almost 18 bucks, or right a little over 18 bucks. And then started tick-tocking back down. And let me show you guys, I don't know if y'all remember, but I gave a price target on this CCXI of around 40 bucks before the news came out, before the FDA approval came out. And how did I come up with that number? Well, I'll go over, I kind of got lucky because I think it broke 40 bucks and went a little higher. I don't remember exactly what it went to, but it was right around 40 bucks was the high. So let me tell you guys how I came up with that number. Number one, keep in mind, it was, I was just guessing, of course. Nobody knows what the high is going to be. But I'll tell you how I came up with that figure. I knew because of that July 7th news that came out and made the stock pop up a little bit that they were pretty bullish on that happening, right? Everybody's anticipating for that, looking for that approval. I can see where it was trading back when traders were iffy on whether it was going to get approved, right? So it went from 48 bucks down to, 9.53 over a few days when it hit the 52-week low down there. And then, so I'm thinking, well, 40 bucks if before, when we didn't know that we had an approval, right? We were trading at 48. Why wouldn't we be able to hit 40 bucks when we do have an approval, right? So that was my thinking. That was my thought process. And also, obviously, 40 bucks from 48, that is your next main organic level, right? $40, okay? Because we always look at those, especially on these bigger stocks, those $10 levels are a big deal for organic resistance, okay? So that's how I came up. I just took, if this, if it was at 49 whatever, I still would have chosen 40 bucks. If it was at 56, maybe I would have thought, well, maybe it is 50 bucks. Anyway, like I said, just a kind of a lucky guess, but I just wanted to share with you guys how I came up with that figure. So that was what I was looking for on that particular news catalyst. Okay, so I think that's all of the examples that I had that I wanted to show you guys. I wanted to give you all just a few examples, and I also wanted to keep this under an hour, which we've done very well so far. So I'm going to open it up now to, you guys, I don't see any questions so far, but if you guys have some questions, certainly post them in the questions during sessions channel so I can get those addressed. And I'm going to stop the recording here.